by the management of PNB. Ashok Chandra, the MD and CEO, is now joining us. Mr. Chandra, good morning. Thank you so much for joining in and wishing you, your team and your family a very, very happy Diwali and a very prosperous new year as well. Start off with your numbers, Mr. Chandra. Your loan growth was a bit lower than what your own guidance was suggesting. And specifically when you see the retail bit, it is impacted as well due to the IBPC. Now, can you tell us exactly what happened during this quarter? And do you see better times ahead in terms of the loan growth in the second half of the financial year?
Thanks for giving this opportunity, and wish you, your entire team, and all the viewers of CNBC-TV18 a very happy Diwali. If you see the performance overall in the credit growth also, we have shown a growth of more than 10%. There is a double-digit growth is there. And retail segment, see, we were very mindful of the low-yielding advances and high-yielding advances. And that is the reason you are seeing that there has been some tractions happening in the corporate loan book. But the retail, which we call it as a core retail, that has grown at more than 18%. Agriculture has grown more than 13%. MSME has grown more than 18.6%. Now, if you include all these things with the corporate loan book, because corporate loan book has grown at 7.9%, but the sequential growth in the corporate loan book also, like QOQ, if you see, it is more than 3%. And YOY is also 7.9%, which is higher than the Q1. So if you add all those things, then then the entire credit growth, it comes to 10.1%. But excluding that corporate loan book, my entire book has grown more than 15 to 16%. And in fact, in the corporate loan book also, last time also, I had shared some figure that we had 1.36 trillion sanctioned book. It is not the pipeline. This is already sanctioned book. Now that figure has gone up now. It is 1.78 trillion now. And this is already sanctioned book for which we are expecting that the corporates will come forward and they will avail that facility. And disbursements should start Q3, Q4 onwards now. So I think we are well poised for a good growth in the credit segment. And the guidance which we have given at the beginning of this financial year, that is 11 to 12% credit growth will happen at the end of this financial year. I think definitely we are going to reach that goal, and we are going to surpass that figure at the end of the financial year.
Okay, Mr. Chandra, that's about the loan growth. Now, let's come to your net interest margins. Your commentary has indicated that it has bottomed out in terms of the number, but there is an indication that there could be more rate cuts as well. What happens to the net interest margin? What are you targeting? Plus, is there an expectation of that changing once there was one more rate cut that happens?
If you recall our last interaction also after the Q1 result, we had already indicated that the full impact of the 100 basis point repo cut will happen in the Q2. Because 50 basis point rate cut full impact was there in the Q1, and the 50 basis point subsequent which has happened, only 1.5 months was there in the Q2. So full 100 basis point impact has happened in the Q2. And I had already indicated in the last time also that Q1 and Q2, definitely there will be a shrink in the NIM. But if you see the impact which has happened, if you see the YOY also and QOQ also, I think it is a very, very muted, the negativity has happened. Like 2.84% was our domestic NIM in the Q1. And this quarter it is 2.72%. Going forward, because we all know that whenever the repo rate cut happens, we are passing this entire thing immediately on the next working days. And when the 49% of my book is priced on the repo rate and EBLR, I think we have passed all those benefits to the clients now. And the same thing doesn't happen in the deposit side, because there is a lag in passing that the reduced interest rate benefit, interest rate to the customers, and that takes some time. And there were some deposits we had a special scheme of 400 days deposit where we were paying 7.25% and 7.75% at senior citizen. So all those things are getting repriced now. And like last time, I have already indicated, and I am holding to that view, that Q3 and Q4, definitely there will be some improvement. I'm expecting that at least 5 to 7 basis point improvement will happen in the NIM in Q3, and around 10 to 15 basis point improvement will happen in Q4.
Okay, 5 to 7 basis points NIM improvement in Q3 and 10 to 15. going ahead. The other thing is your credit cost. While you have lowered the guidance while moving from FY25 to FY26, and even this quarter you've reported a negative credit cost. Will it sustain, and what is the guidance, sir, you can give on your gross NPAs?
Yeah, see, the credit cost in the first quarter itself, it was 0.14%. And the guidance which we are given for the full year is below 0.50%. This quarter, it is almost at the bottom, rather it is negative now, 0.2622%. We are still holding that our credit cost will be really very small number will be there. The guidance of 0.50, definitely we will be far below that number. Reason is that we have almost a 97% PCR. Exact number is 96.91%. And this quarter also, if you see, there has been further improvement in the PCR. Despite having negative credit cost, we have improved in the PCR. And absolute number in the net NPA, that has also come down now. So we have made some provision in this particular quarter also. Despite making a provision, since there was a good write back of provision was there, and we have a very good slippages management. I think that is also playing very important role. Like in this particular quarter, our slippages was only 1,900 crore compared to last year it was 2,200 crore. So slippages management and the good recovery, I think that is playing important role in the credit cost. As far as the gross NPA is concerned, if you see, the drastic improvement has already happened now, and we are at 3.45%. And the guidance for the full year is below 3%. I think definitely we are going to achieve that guidance. And when the net NPA also, 0.35% we have given the guidance, and we are at 0.38. So we are all well above the guidance which we have given, and definitely there will be significant improvement in the asset quality, and all the parameters related with the NPA management will be there.
Mr. Chandra, there are lots of questions, but I'll sneak in a quick one on PNB Housing as well, the hunt for the new CEO. Where has that process reached? And part two, will it be an internal candidate, or are you zeroing in on an external candidate as well?
See, in my last conversation, I had made it very clear that there will not be any internal candidate from PNB to the PNB Housing. And still, I am holding to my view on that. As far as the process is concerned, I think you have seen that very transparent process was initiated by PNB Housing Finance Limited. We are one of the promoters, but we maintain a very arm's length distance for all the process, which is being conducted by the PNB Housing Finance Limited. I am also expecting that very soon the final outcome will come, and we will have a new MD and CEO in PNB HFL.
How soon is very soon, Mr. Chandra? If you could share a timeline, sir.
See, there are certain processes are there, because they have to finalize the name, then NRC and the board, they have to give the approval, and then finally it goes to RBI. Once the RBI approval comes, I think then only it will be in the public domain, and then only it will be known to everybody.
All right, take that point, Mr. Chandra. Thank you so much for joining in today with your insights and the outlook about bank's performance going forward. With that, we'll slip into a short break. When we come back, we'll get you more on the markets on the other side.